I am optimistic that we will achieve, this handoff between the between policymakers, Federal Reserve Chair Powell, and the economy. And that's something that was discussed last week at the Fed's annual Jackson Hole Symposium, where Fed Chair Powell suggested that, there was enough progress being made to consider to start, tapering. They didn't give an exact date on this, of course, because I think, what the Fed acknowledged was there was still this tension between the Delta variant and economic growth, but clearly the momentum is behind the idea of tapering. And I think it will be announced soon and beginning maybe early in 2022. The market's pushing against that. If you look at the response to the 10-year Treasury yield, the 10-year Treasury, which is a barometer for growth, it rallied. In other words, its yield came down. So it seems to be that the market doesn't believe that the Fed's going to be successful. But I think what the market is maybe misunderstanding here is that our economy looks much different than it did in the last economic expansion. The Fed, back after the financial crisis ended in 2008, 2009, had to continue with quantitative easing. They did QE1, then QE2, and then QE infinity. But one of the reasons why the economy never achieved this escape velocity is that the consumer never really recovered. And that's the key fundamental difference between the last economic expansion and this one. The US consumer, their household balance sheet is in record strength. So as this Delta variant continues to work its way through the system and we get on the other side of it, we have a consumer household balance sheet that's really poised to take this expansion further. And I think they're going to define the next leg of this economic expansion.
For the S&P 500, we've seen a 20% gain thus far into the year, with not even once seeing a pullback of 5%. Does the market seem set up for a correction or a pullback when tapering begins?
I think as liquidity starts to be drained from the system, we are going to be looking at a shift in equity markets from the liquidity provided by the Federal Reserve and all the stimulus to fundamentals. In other words, I think earnings are going to matter a lot more. And we haven't really seen earnings mattering as much because we've seen multiples increasing. We've seen record price to sales, record price to book, record enterprise value to EBITDA. And I think what we're going to see is a rotation in leadership. Doesn't mean the market's necessarily going to fall, but I think we're going to have a rotation in leadership to those companies that are cyclically sensitive, like industrials, materials, and energy.